Heya Cryptozens. Tonight's show. Celsius Network files for bankruptcy. Celo Network halts. South Africa rules crypto is a financial asset. It's 10 p.m. Pacific time. The date is July 14th, 2022. Happy Bastille Day for all of our French listeners. And welcome back to the Crypto Overnighter. My name is Nicodemus, and I'll be your host. The cover model, mascot, and co-host for this podcast is Tex, and together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. So take a minute, go ahead and subscribe to the podcast now, because we're here at 10 p.m. every night so that when you leave in the morning, you're taking with you the crypto news analysis that you need to start your day. Keep in mind, nothing in this show should ever be considered financial advice. Surprising no one, not even themselves, the mighty Celsius lending platform has voluntarily filed for Chapter 11 bankruptcy. That was in the U.S. Bankruptcy Court of Southern District of New York. Their lawyers kicked off the whole process on Wednesday. That's when they started letting the individual state regulators know what's up, because those state regulators were sharks. They were circling Celsius looking for an opening. We were just talking about this on Tuesday. That's when Vermont's Department of Financial Regulation issued a warning. They were making sure that residents know that Celsius wasn't licensed to offer services in their state. And it was just Tuesday that the Vermont DFR was speaking of Celsius using terms like deeply insolvent. They expressed concern that Celsius didn't have the assets, didn't have the liquidity to fulfill their obligations to their customers. And it would appear that they were right. And Vermont is just the latest. 5 other states also opened investigations into Celsius's activities. They're Texas, Kentucky, Washington State, New Jersey, and Alabama. And here's what's up with that. $1.2 billion hole in their budget, which might surprise some folks, because we were also talking about that the other day, that they were on a campaign to pay back assets, that they were trying to unwind their obligations and preserve as much capital as possible. At least that's how it looked to me. You know, figuring out the right order to pay off all of the collateralized loans and preserve capital. Now, at the time, I thought maybe that they were still thinking they could make a go of it. And at the time, I said I didn't think that would work. All in all, the firm was able to get $1.4 billion worth of collateral back. Unfortunately, a lot of that is in wrapped Bitcoin and staked Ethereum. So they got it back, but it's not healthy. Alex Mashinsky is the CEO of Celsius, and maybe he was listening to my show. Anyway, it looks like they were trying to figure out how to pay as much back as possible. So earlier, before filing for bankruptcy, they paid off the last of their DeFi debts. And it makes sense in a way. You know, the modern system just isn't really set up to deal with defaults in DeFi. Not yet. You know, they'll seize your asset, and then you'll miss a deadline, and then your asset's gone, and that can't go to your bankruptcy. I expect regulation is on the way that will change that, for good or for ill. And so it was that on Wednesday, Celsius closed out the last of their loans with Compound, Aave, and Maker. They powered through a debt of $820 million down to just a little bit over a penny in the course of a month. After that was accomplished, they set up the business of filing for Chapter 11 reorganization, bankruptcy. This is a recent development, and the timing of things lends some strength to my theory. The reason why I say that is because they recently made a change, and I think that change is what led to the filing on Wednesday. And that change was a change in representation. They were previously represented by the law firm Aiken, Gump, Strauss, Hauer, and Feld, LLP. And now it's Kirkland & Ellis. What's interesting about Kirkland & Ellis is that they also represent Voyager, who is another crypto firm, exchange this time, but a crypto company nonetheless. And they found themselves in deep financial troubles and are also filing for bankruptcy, also a Chapter 11 reorg. So maybe they were thinking that they were going to be able to make a go of it. They got these new guys in Kirkland & Ellis, and they said, no, that's not going to work. You got to do this Chapter 11 reorg. So they paid off all their DeFi loans. Even still, even with all of that capital freed up, they're in the hole. Their bankruptcy filing basically covers their balance sheet, and that document shows Celsius has $4.3 billion in assets and they have $5.5 billion in liabilities. About $170 million in cash. Crypto assets, they have $930 million in loans out there. Now, they did something in their filing that I don't know that that's right. They list Celo, it's their private token, as a $600 million asset. And they counted it towards that $4.3 billion asset total. So, as we like to do on this show, let's take a look at the numbers. According to the max supply of just over 695 million coins, and at 71 cents each, right now, there is a total market cap of 170 million, 496 million fully diluted. Now, I know Celo dumped hard when the bankruptcy news came out. That said, it's made a lot of that back up and then some. It went from between 82 and 85 cents each to 45 cents. That's on the news about the bankruptcy yesterday. There's no way Celo was worth $600 million in any form or fashion yesterday when they sent in that filing. Then again, I'm not a lawyer. I don't know if that's a problem. I do know that they filed a motion to let themselves keep operating, quote, in the normal course. That would let them pay employees and continue to pay expenses, at least while the restructuring goes through. One thing that they're not doing, they're not giving depositors access to their accounts. Customer claims are going to be handled in the Chapter 11 process. Now, I mentioned Alex Mashinsky. He sounded optimistic in his remarks. He said, quote, "This is the right decision for our community and company. We have a strong and experienced team in place to lead Celsius through this process. I am confident that when we look back at the history of Celsius, we will see this as a defining moment where acting with resolve and confidence serve the community and strengthen the future of this company. And my fervent hope is that he is right, that it will be a defining moment, not a Mt. Gox moment." Now, I don't know what's going to happen, of course, but I do know this. There will be reams of crypto regulations inspired by the Terra Luna Black Swan event, leading to Three Arrows Capital, Voyager, and Celsius filing bankruptcy. And I think we'll be better off for it. At the time of writing, the global crypto market cap is $921 billion. It's up 3.96% in 24. The top 5 cryptos by market cap are Bitcoin up 2.98%, Ethereum up 8.88%, Tether, USDC, and Binance Coin up 4.5%. So, as near as I can tell, the Celo blockchain has involuntarily halted operations, but the price of the coin continues to go up, which is exciting but kind of confusing at the same time. Yeah. So the last transaction processed was about 14 hours ago at the time of writing, and it got stuck Thursday night. It stopped producing blocks. Celo reported the stoppage on Twitter, and the tweet was not only the fact that the blockchain had stopped working, but that the validators were trying to get it fixed. They tweeted, quote, "The Celo network has stalled at block 14,035,019. Validators are working to identify and resolve the issue. All funds are safe. Updates will be provided as soon as possible." So notice, there's no explanation of why, no explanation of what's happening, just a notification that they're aware of the issue and are working on it. So they got to work on it, and the network briefly restarted. Sadly, that only lasted a couple of minutes. A dozen blocks and 2 minutes later, and the Celo network experienced its second stoppage in less than a day. At that point, 10 hours later, they put out another tweet. Quote, "Update. Validators are working to restart the network. Block production resumed briefly, however, stalled again. Validators, please join the Validators Operator channel on Discord and follow the posted instructions to update your node. As previously stated, all funds are secure." And about 4 hours later, they put out another message. This one hints at the cause. Quote, "Update. If you run a node, please join the Validators Operators channel in Discord for an important update. A new GitHub release is available that mitigates an issue around block sizing and message capacity. All funds are secure." 3 tweets, 3 assurances that all funds are safe, 0 explanation of what's going on. Now, there's $129 million in assets staked on DeFi apps on Celo. Now, all of those are locked. Can't withdraw them to exchanges, can't bridge them to other blockchains, nothing. Now, weirdly, investors are not punishing Celo. The coin itself, the token, seemingly unaffected by the news. As we like to do here on this show, let's take a look at the numbers. At the time of writing, Celo is weighing in at 87.9 cents each. Today, it hit a high of 88.7. So it's not far from today's high. But that's not what makes it weird. What makes it weird is that it started off at 84.5 cents yesterday when the network crashed. That's a 4% increase. Now, granted, the crypto market is up a good amount today, but usually a stuck blockchain does not increase in value. So your guess is as good as mine where Celo is going to end up in all this. The global NFT market cap is down 8.77%. Sales volume is also down 0.57% in 24 hours. According to CoinMarketCap, the top 5 NFT collections by sales volume are CryptoPunks, followed by Otherdeed, Bored Apes, Mutant Apes, and the Saudis. Now keep in mind, some of these collections have very volatile prices, so do your own research. Kuben Naidu is the deputy governor of South Africa's Reserve Bank, their central bank. That makes him a central banker. I generally give central bankers a bit of the old stink eye. This guy, though, he might be one of the good ones. Sort of. His heart's in the right place. Here's what I mean by that. He was speaking at a webinar. It's one of the PSG Think Big series of 2022. And it was in this speech that he highlighted that South Africa was changing their stance on the subject of cryptocurrency. Because now they're looking at crypto as a financial asset, but not a currency. This isn't a new thing for them. That said, they haven't gone about a lot of regulating in South Africa. They kind of just let crypto grow and develop however it wanted to. There was no real clear-cut regulations or guidelines to go by. This situation has led South Africa to become one of the leaders in crypto adoption. Out of 59 million people, some 6 million are estimated to own some sort of crypto. And that lack of regulations is even after a number of stories came about as scams and theft have been making the headlines in South Africa for a while now. Remember, it was just last year. The KG brothers, co-founders of Afriquip, they stole 69,000 Bitcoin and then just disappeared. That was a $2.3 billion theft at the time, only worth $1.4 billion now. So it should just not be a surprise to anyone that regulation is in fact coming. And that makes things a little less uncertain for South Africans in the crypto space. Marcus Wrights is a general manager for Africa at Luno. Luno is a cryptocurrency exchange. In correspondence with Cointelegraph, he said, quote, "It will require crypto asset service providers to obtain FSP licenses and will be easier for the public to identify a trusted and licensed platform. It will create a barrier to entry for those platforms with no regard for the security of customer funds and customer information." Now, he was saying that because they already operate in other markets with much stricter regulatory guidelines in place, so they're already kind of set up for it. There's no big change for them. They're already doing KYC checks. They're already doing anti-money laundering and anti-terrorist finance screening. Interestingly, there are no laws on holding proof of reserves. Valor is another South African crypto exchange. Same story. Their CEO, Farzam Ihsani, he said that they're already compliant. He said that they're doing the KYC checks, that they have risk management in place, and they've got compliance plans. Now, no matter how much Naidu's heart is in the right place, the context is for a central banker, because disappointingly, South Africa is still considering adopting a central bank digital currency. He was talking about it when he said, quote, "The issue about whether the central bank itself should have a digital currency, and we are experimenting, we are learning. We've had 2 pilots we've done. We've created a central bank digital currency in a test environment, but I think we are probably several years away from that. Personally, I hope they see the benefit of not going through with it." And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I'll stop talking. You stay safe out there. Watch out for yourselves, but watch out for each other too. We'll see you tomorrow night.